Are we live? Oh, we are live. Let me just kill the camera and switch to my screen. Mic check, mic check. Hope everybody's doing well. Hope everybody's doing well. I do apologize for starting today's morning live so late. I don't know if you follow the 365 page, but you're not in our public Telegram group, please join the public Telegram group. I'll post a link down below, and the reason for that is fundamentally because all the announcements are made in that group. Sometimes my desire to start on time and actually being able to start on time, is generally hindered. But this morning it was actually worth it because I was, talking with and to a couple of people about, market structure. And, it's quite interesting, like a lot of the views out there. So I want us to walk through a couple of things. It is the 1st of March. And because, these morning streams are quite new, even to myself. Can someone just give me a mic check, by the way? As soon as you get a chance, please do give me a mic check. Let me know if you can hear me loud and clearly. But a lot of the times, what happens is, on the first day of every single month, a lot of people forget this, but your governing structure has changed, right? Remember, after the last day of the month or the first day of a new month, your monthly time frame has formed a new full candlestick, and that candlestick can give us a lot of direction of how the next month is going to evolve. For example, we know that gold pretty much historically now has closed with a new demand. For those of you who are supply and demand traders, that's exactly information that we can operate on. We also know the type of supply and demand, or rather the demand, that gold created, and it's the type that might require some retracements, right? So that we can get a retest, etc., etc. So it's just kind of like those type of things that you want to kind of like consider as partly as your first day of the month routine, right? So to speak. Right, so today I'm going to look at our usual pairs that would have normally done at 9 a.m. during the morning market live session. I'm going to look at those pairs. I'm going to let you know, exactly, what I think. We have missed, the order flow time. The order flows, generally speaking, are done within the first hour. And then from about 10 a.m., you can almost naturally expect like an explosion, right? This is loud and clear. Fantastic. Thank you so much, guys. Thank you for the sound check. But you can almost expect a sound check. Now, I was this morning, the reason why I was delayed was we accidentally got a new client, a new corporate client signed by my team, and they're allowed to do that. It's just that I had not expressed the fact that I did not want to take any new corporate clients this year. There's only so much attention, basically. Like we're not a floor trading floor that is always looking for capital. We do very well with the little that we have. So fundamentally, I'm quite picky. Anyways, this new client wanted to meet, and it was a good meet. But they've got this weird complex where they also want to control stuff, right? So I'm bringing this up because I think it'll show you a lot. So now I have looked at a lot of cotton trades in the last 2 years, since COVID, so to speak, both in options and contracts, right? And our client for that, after that contract ended, we moved on, right? But cotton as a CFD, as an actual commodity, has just been doing well, right? Specifically, the futures has just been doing absolutely brutally well. I mean, I can't even, okay, the 2020 contract is expired, right? We'll look at the continuous and current running. And I bring up this trade because if you've ever done my course before, you'll notice that these lines are when I teach you guys supply and demand curve in Model 2. And this is the chart I use for a different client who was in farming. So farmers, generally speaking, will go to the commodity markets or the financial markets to hedge. They hedge against their positions, right? And so we had, a farmer client in 2020 when I took this big buy for them, right? And our supply and demand curve to get exactly what they wanted, we just had to hold price from about 49, almost $50 to about 94. It was a beautiful run, right? And now we've got a new client, which we signed by mistake, that we have to deal with. And they also want to get into the bag. And I was trying to explain to this client that, because they were wanting to know why we haven't moved on the account. So their capital is still the same. I haven't done much to it. And it's fundamentally because of supply and demand. You have to let price come back. And a lot of these assets, right, during the war, I'm bringing this up because I've been talking about this since about 8 a.m. A lot of these assets really fundamentally have to make peace with the reality that there's a war and markets are shaking up and things are moving on quite quickly. And the cotton chart is a great example of this, because this was a market crisis, 2020 market recovery, and now we're about to start a new market crisis. And you can only imagine, you know, the rally. Long term, from governance perspective, cotton is only about 50% through up its trend, right? There's still a long way to go. A nice 2 to 3 years, right, of a good hedge, fills up the space. Cotton, wheat, beans, coffee beans specifically, all those commodities are there, right? But back to our normal morning routine, you guys will have noticed a couple of things happened last night. Number one, I find it so interesting. Bank of America say they don't believe crypto is in a bear market because of the adoption stages. Now, I want to be very sure. I want to be very, very, very clear. Let's see if I can find it. Bitcoin early adoption chart. Let's see if that will help us. If not, then I'll go to Glassnode, right? But when was this made? There we go. Let's see. Right, it's very important when these big financial institutions, right, make, okay, I won't be able to find it, guys. It'll need me to dig in a bit because I don't want to use these old curves without really knowing exactly when they were made, right? I'll find it for you and I'll bring it up tomorrow. But there's a basic adoption curve, right? So early adopters, this is a better explanation. Early adopters would be the ones who bought in during and after that crash, the 2017 crisis crash, right? And if you look at this weird stage, that's kind of like where we're in. We're like in the 2022, early adoption phase. Now, these are your whales who bought in immediately, 2010, 2011, 2012. Which is literally the minority, like 2.5%. Those of you who have been buying crypto with me since about 2017, etc., we make up 13%, right, in that early adoption phase. The same curve that you're looking at here is pretty much the adoption of the internet in 1990s, right? And then you get this group that's going to start to wake up. Oh no, El Salvador's GDP went up because of crypto. Ukraine because of crypto. This and this because of crypto. Warren Buffett investing in crypto. These guys fall in here. And these are the majority adopters. They are the ones who push us into parabol. Every cycle ends and starts a new cycle because of parabol. When we do about 100K, we'll now be inside this group. Because everyone in this so-called earlier majority, we are early adopters. Everyone in the earlier majority are the people who are still holding a slight fear that crypto might disappear, might crash to zero, might blah, 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 blah. And so it's always interesting to see that human beings do the exact same thing over and over again. By the time the late majority comes, things like supplies will be done. So Bitcoin supply will be finished. And I've gone through this many times. Anyways, so in the early hours of the morning, Bank of America said, look, man, we don't really think that cryptocurrency is in a bear market, okay? They were quite clear about that. They think because of the early adoption stages, massive projects going on, that is technically not in a bear market. You remember, those of you who attend my stuff all the time, I told you guys that as long as Bitcoin is above $28,500, we're technically in a bull market in a bear cycle. Bull market, bear cycle. And there's a difference between a bear market, bear cycle, right? We're still in a bull market, bear cycle. Bitcoin was saved as well strategically at a very strong psychological level. You remember that this was this demand here at 37,427 that I was watching for. I saw it get broken. We covered all of that stuff. Believe it or not, the sale that I took right here, there, I arrived at a perfect 1:3, and I was just too busy, waiting for a bigger drop in Bitcoin. That price literally came back and broke me out at break even. Just to be clear, at some point yesterday, I was up 3,200 and something US dollars. And at some point yesterday, this chart kicked me out with zero, like literally kicked me out at break even. And it's just kind of like goes to show that I am not that focused right now. I'm doing way too many things. and losing money. But it was a perfect 1:3. So I would encourage everyone to just earmark all their take profits around 1:3. Like I've said many times, there we go. It was literally 1:4. It was a beautiful trade at about 10 p.m. ish. Price arrived at this historical demand. I didn't think it was gonna hold because I know that they've broken this demand, but because of the Bank America tweet, the stuff that's going on in Ukraine, I don't know if you guys saw, they raised almost 25 million US dollars in Bitcoin just yesterday. Or in the last 3 or 4 days, right? This was an incredible bullish incentive, plus Bank of America, a big institution, finally blessing crypto, right? Markets rallied all the way into this new supply. What does this mean for crypto? Well, again, like I say this and I'll keep saying it every day, it's a war. And right now, everything goes. I mean, right now, or the last I checked, there were negotiations for the war, but Russia was throwing bombs. In fact, there have been satellite pictures showing, look at this, a massive Russian convoy appears to be heading for Kyiv as fears for an assault grows. So there's a potential that a full-on assault is about to take place, even though just yesterday, the markets, I mean, you should have seen NASDAQ, everything was so optimistically positive, fundamentally because, Russia, the ambassador, the representative at UN, kept saying they are open to negotiations, number one. Not only that, but they want them to be fruitful, right? So that's a good sentiment. Markets are like, yep, war is coming to an end. Because remember, if there are peaceful negotiations and all sides agree, really people want a ceasefire and Russia to leave. Now, if that is the case, which it looked like there was going to be at least open dialogue yesterday, then why on earth 24 hours later do we have a full-on convoy heading towards Kyiv, right? So this is it. This is what a sentimental market looks like. This one is more erratic than COVID. Remember in COVID, the first 2 weeks were like this, up and down, and then it just became flat down up until the 23rd of March, and then up, because at some point in time there was only so much sad news that the markets could price in. All right, at some point in time there's now we'll get a cure, let's leave the pharmaceutical industry to do what it will do. War is slightly different, especially with someone like Putin here, right? But yeah, so short-time traders will look like they're doing well. And the trick really is, most of the time, guys, it's just simple. Just check where people enter. So if you're in a public group and people are always posting their trades and what, and you feel like you're missing out, if you're armed with this logic, you just simply type their entry point and their take profit and see for yourself the type of risk some people are taking. You never know who's trading on demo, who's not. All I'm just saying is I see everything and I think through everything, and I'd appreciate it if everybody does that for themselves. This is not the type of market you want to enter due to a feeling of missing out. This is how your capital gets punished 9 out of 10 times. But if you're very good with small time frames, there's generally always an opportunity waiting for you, right? As long as you know when to get out. Look at my Bitcoin trade. I got out on zero completely after price moving in my direction for a very long time. I did not anticipate a quick turnaround overnight because price had not yet arrived at a significant demand. Right, so now the whole world is back to crypto positive. Everybody believes we're pumping. People are buying once again, and the sentiment will continue until it changes, right? So let's quickly do what we do. So Convoy, this is a big deal. Global Hacking Group Anonymous, right? I don't know if you guys know these guys. If you follow my Anarchist Monday series, Anonymous Group are quasi-anarchists. Basically, they believe in equality and freedom, and they are out creating a cyber war against Russia. More power to them. History will judge them. The Ukraine foreign minister was talking about how big oil companies are very much linked to Russia, and they are hesitating a lot on seeing stronger sanctions through. Right, stock futures flat ahead of the first trading session of March. All right, today stock, so you'll see our futures are down. Nasdaq is falling, right, in the beginning of the London session, right? They're open to the downside, although price tore through this H4 supply. And yesterday, those of you who attended my dollar NFP war room, I told you guys that I am only bullish on Nasdaq if Nasdaq can remove these daily supplies at the top. Which means for me, I'm so chill right now. I like literally, if Nasdaq can interact with 1600, and get me all the way above about 1,500, right, on the Nasdaq, then Leroy is back to buy. Until then, I'm going to enjoy myself and watch markets and commentate for those of you who are happy to take trades. I will be looking for sell opportunities between now and then, just so we're clear. I will not be doing 20 points on the Nasdaq with 700 entries just to make some money, right? I never take such risk on my accounts. I'll be doing clean trades that I can hold because I know they're in line with the long-term trend, right? So right now, until markets break through these yellow zones, for me, we're still bearish. Up until then, right? Long lines of Russian ATMs, right? So people don't have cash in Russia. The ruby was falling. We spoke about that yesterday. European markets pull back. Russian convoy appears to head for Kyiv, right? So all of this is a big deal right now. The entire market sentiment is based on this. We thought there was a negotiation. What's going on? If there is a real negotiation, why on earth is the army advancing to Kyiv? And why? How many people are there, right? Bitcoin. This was yesterday when Bitcoin jumped 10% after Treasury imposed new sanctions against the Russian bank, right? And like crypto is weird because the sentiment is driven in both ways. There's the negative drive of the fact that there's a war, but there's also the fact that more people are using it, right? More people are using crypto in Ukraine than ever before, although Ukraine had a massive adoption rate already. But people in Russia, like normal, ordinary people who are not in the war, who might even be against the war, also were caught queuing, long lines, in the ATMs, withdrawing cash and converting it as quickly as possible to cryptocurrencies or buying digital assets, right? Basically to preserve their money, right? So there's an insurgence of money, in crypto right now. Russia gets the cold shoulder at the world's biggest mobile phone show. None of this is important right now. Let's come to people who have their finger on the vein, and then we'll look at some charts, right? So manufacturing PMI is a little bit higher than what was expected. This for UK. Suspends deliveries to and from Russia. All right, this is the world's largest container shipping. So we've been talking about supply chain problems, like how if you need a couple of parts from Japan, but you can't get your shipment to come on time or come at all because of COVID restrictions, because of costs, right? Some people ordered something for $20, it stays on a ship for 3 extra months because of COVID delays from last December, and now for you to get the thing off the ship, even though you pay $20 online, you now have to pay $60 US. It's a silly example, but costs are going up. So now imagine the supply chain issues that are going to happen inside of Russia, right? Ordinary people who are not even involved in the war, they will not be able to get basic stuff because ships are no longer wanting to deliver things to Russia as part of this, global punishment, right? EURUSD is steady, but sellers still keep near-term control. So I did notice that Euro failed to cover the gap yesterday. PMI, not much is going on. A lot of PMI for Euro, right? So European Commissioner for Competition says they can't ban Russian gas completely. We know that Germany really needs it, right? Even though Germany is sending weapons to Ukraine, Germany also does not want to, punish their people, right? They need gas. There's a massive gas line between Russia and Germany. European equity is slightly lower at the open, right? So we'll have a look at the FTSE. Risk tones tilt towards being slightly more positive to start the session. This is about, 9:30. I don't know whether it was before this convoy news dropped, right? Russia advance on Kyiv has made little progress in the last 24 hours, right, from the UK intelligence, right? So, this war stuff is a little bit boring, right? So that's kind of like where we are in terms of market sentiments. Now let's look at our everyday charts. Sorry, I kind of like sped through that, but I want to get to charts and then release everybody, and then we can go on with our trading day. Euro pound is generally the first thing we normally look at. Has been. You'll forgive me. I need to catch up with a lot of things. I need to draw our 1 hour lines. I don't remember doing that in a long time. All right, so okay, fine. So I did map this out for today at least. Right, so we have this interesting supply, right, which was on the 28th of February from yesterday, okay? Right in front of you here. So yesterday, Yes, yesterday was the 28th of February, right? So there we go. This was yesterday. I drew this probably sometime in the night when I was really just trying to figure out what's going on in the markets. And that's how markets opened on Monday. Please be aware of that. And then we have this big gap. And so obviously the gap needs to be filled. Now, the only way for this gap to be filled for price to move high, you can see in filling the gap, markets have moved. Well, it's almost too late to buy, by the way, but I'm just saying markets have moved this high in filling the gap. Everything here has been filled, right, with this last previous high. All that needs to be filled right now is here. And my assumption with gaps, and I'll run a proper teaching series on gap trading. My assumptions with gaps is, there's a lot of sell pressure up here for price to gap down there, right? There's a lot of sell pressure. And because it's the opening of a session, midnight of an Asian session, I think it's something to look out for, right? On Euro Pound, it's predominantly important, unfortunately, because it's not a normal day in the markets. Please remember that sentiment is driving money right now. A lot of market sentiment is driving money. And so you will have to absolutely take note of that, right? That this could work, slightly against you if you just jump the gun. Do not just get there and sell without, checking left and right, right? But there's a high potential that before the week ends, we would have filled this gap. Markets hate living gaps, right? But let's see the bigger picture of Euro Pound, because I think a lot of people forget that when it comes to short-term trading, please, the daily is your friend. You want to get a good daily picture, right? So I have a swing trade that I'm waiting to get triggered all the way up there. The swing trade was marked long time ago before any war started. Since then, markets have been ranging. I don't know if anyone has picked this up. Most markets created a range where they will move up and down and consolidate for the most part, but they will not breach lower or higher up until there's clarity, right? There will be a sentiment to the downside, sure, but a lot of it will consolidate sideways, up and down a bit. Things like gold are the things that are breaking out of their long-term consolidations, right? So if I look on the daily time frame, I'm just going to go weekly, but weekly is completely unnecessary, for these really short time frames, right? So this red line that we have here really marks like the end of a weekly demand, which is so important. And the second red line that I'm putting here marks the beginning of that weekly demand. And you can see that we are currently trading inside a mayoral demand. That's important. All this trading activity up and down, up and down, up and down is inside, the bosom of strong buying potential power. Now, as far as I remember, Euro Pound in general, outside of a normal natural circumstance, is geared to fall for another year. All right, when I look at this chart, all I see is a downtrend. But right now, we've got a weekly demand holding price up, almost like its last line of defense until a big drop happens. I'm absolutely right. This is the last line of defense for Euro Pound until a big drop happens, okay? Now, if that big drop happens, I really hope that it's the swing trade idea that I have marked out there that would hold us to account and push price down long term. So I haven't given up on my swing trade. I'm just waiting for price to get there. In between that, it becomes so difficult for me to always be in a rush to sell, even on short time frames. Now, I understand that the daily time frame will govern a lot of the immediate time frame movements. And somewhere in here, we can see there was a PCP, we can see there was a downward trend, we can see that markets came back up and then went down, creating yet another supply. But this supply on the daily, to me, looks broken. I'm so sorry. I know my charts are messed. There's so many lines, but I'm really, really, really asking for some keen eyes. But if it's not clear, just tell me on the live. Please don't suffer in silence. If stuff is not clear and you want it zoomed in, talk to me. But my point is, this supply here on the daily was taken out, which makes sense because once again, we are sitting on top of the weekly demand, right? So I'm mindful of the fact that the short time frames might need to sell because of sentiment, but I have not forgotten that between line one, and I'll make it very thick for you, or not even thick, I'll make it white so you can see it nice and clear. Between these two white lines is simply strong buying support. This is strong buying areas. And we have that confirmation. You see this? There's a strong swift that took out a daily supply and was trying to get to the next PCP, which was eventually going to get to our target area up there. So I don't want us to forget about that right now. If price was to drop in the smaller time frame, knowing how markets move in zigzags and protecting lower highs and lower lows, right? My charts are getting uglier and uglier by the day because of all these extra things I'm adding. I'm going to make this white. This white area, grayed area, not even white, this grayed area that I've just put up, this is the latest, freshest, strongest daily demand at play that is just taken out an opposing area of value. And we can see that price just added a little bit of weight there and dropped some more. So when I'm looking at these drops on the intraday time frame, I'm quite mindful of a couple of things. This daily demand is broken as well. Interesting. This daily demand, let's go back to the daily chart. This daily demand is broken. Interesting. Am I right? Right. I don't know where the wick ends, right? There's no wick on that red candle. So that's where it is. So this is how I draw my demand. There's no wick on that green candle as well. Right. So this is the demand here. All right. And I just want to make sure. So everything outside the white boundary would indicate a broken demand. So let's go to the H4 chart one more time and just double confirm. So this is that daily demand area here. This is what we're looking at. And look at this. Last week, Tuesday, Wednesday-ish, markets broke this demand quietly. I'm going to delete this. You see this there? This long wick, markets broke this demand, right? That's telling. Yes, took all the money to the upside, literally ran with it. Like, so they took every single buy order, and you can see how price ran. From that buy order, this is what broke the daily supply, all right? And then markets gapped down to the lower side. So the entire time I was thinking I'd want to catch a play here and buy. But now I'm more skeptical, even though there's a strong demand that took out a supply, the demand unfortunately was broken, right? So on the H4, it doesn't look like we're going to get much help. Right now, the H4, I'll draw it and delete it. So just so you are aware of it, there's a bearish engulfing pattern somewhere in here on the H4 time frame that markets are currently reacting to right now. And remember, markets drop, bearish engulfing candle, markets shoot in, retest, and then drop again. So when you finally get to the 1 hour, we get a mess, the mess that we have. I'm going to remove this because it's getting unclearer and unclearer and unclearer. Right. So this is what we have. We have this old demand here that's holding price, and now markets are digging very deep, really digging very deep. In fact, I would go as far as to say this area is now useless and price is now sitting here. So this has already given us all the tests, fresh touch, retest. It's an exhausted area of value, and this is the last line of defense, which I'm pretty sure we'll see a little bit more digging on the 1 hour time frame. It is once again still my humble opinion. You can still see here how clean this daily demand was taken out. It is my opinion that for more sell side pressure, the best type of sell side pressure would first require price to move up. Personally, I would first require price to move up into this final supply, closing the gap on our way up, and then pushing price all the way down. Since this is all open, seeking out another move. This could happen either tomorrow New York session when price gets here, or maybe even the London session tomorrow morning, right? I think between New York session today and Asian session, based on the tone, right? Euro markets have stepped, moved back a bit, slightly tilting to risk off because of this right now. Nobody knows what this is. And obviously I'm being sarcastic, right? Why else would Russia send a convoy into Kiev? Everybody knows that a full on assault is about to be paid for, or posturing, right? Like, we are serious about this. Russia could just be posturing, right? But this huge convoy creates fears of there we go, switching their full out assault. Yeah, that's how I see it. And because of that, markets have turned left. But at some point, markets have to reconcile with what's going on there. So the only trade idea for me right now would probably be to sell there. I wouldn't know when to start buying to the upside. Even as an intraday trader. And when I say wouldn't know, I'm talking about a risk-friendly trade, a trade where I'm not risking most of my account. If I come to the 15 minutes time frame, I would happily take a risk if the area of value was this small. Right, on the 15 minutes time frame, if markets come somewhere in here and I was a cowboy, I would giddy up and hold a buy up until there and hope that markets do that. What would it take for price to rally like that on a risk-sensitive asset? Tough sanctions. America is getting involved. Negotiations are going well, and there isn't a war. Oh, I'm only saying this now. Do you mind looking at euro pound for me? Not sure if we spoke about it recently. Oh, that's all we've done so far. We're actually just looking at euro pound right now. That's all we've done so far. So this is really you know, a very, 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 you know, tough trade to imagine until the sentiment changes, right? So if there's any type of good news, then the buyers somewhere down here from this area on the 15 minutes time frame, those buyers will do well. But if you look here on the 15 minutes, this area here is exhausted. The floor has been used multiple times, and this floor won't hold. There'll be support and resistance traders here, but that floor will not hold, right? So if you want to buy out, you look for a buy somewhere down there. Personally, for me, not interested, right? But it doesn't mean you can't make money, right? But I'm not interested. It doesn't make a lot of sense, right? This is really the area. You can see I've just adjusted what it looks like on the 1 hour time frame, but it's exactly the same place your entry point would be, right? So cowboys can buy there if they're interested. Generally not me. You could get a push throughout today in the New York session down here, or the sentiment could change, right? But I would more like to sell or trade in line with the long term and rather take a risk up here, all right? This could also be taken out if the sentiment changes by the time price gets there. But that's euro pound. But if you did just join us late, and you can just quickly rewind. But that's pretty much what I said was, you know, sell there, buy there for various reasons. I need to see this gap filled, right? This market efficiency gap filled. Until then, I will not be involved in the center here, right? And then we've got Euro USD. Let's go to our daily, hourly platform. Right, there we go. So this is Euro USD on the 1 hour time frame. I see I did mark the opening today, but let me just put in a clean line for tomorrow's opening so that we can see the range we're trading with, 9 a.m. Right, so this is Euro USD. You guys do remember, I mean, these sessions, they are quite beneficial. I told you about this. I don't know how many of you took it. I hope some of you took it, right? Price came back into a demand. And now since then, market sentiment has been trying to push price up and down. And because of today's news, that's what's going on. There isn't really much of a trade idea, but let's start to dial a little bit back for H4 first, and then let's start from daily. So as you will know, once again, for the swings, we have good swing positions at the top. And for me, I never compromise a good trade idea. Good trade idea for a swing trader is a trade idea that will make you the most money with the least amount of work, right? So there's a good supply on Euro USD somewhere here in this green zone, a very good daily supply. Actually, there's like 2 or 3 of them. So you could swallow all of them, or you could take one of them. You could take the highest. For example, this is where I am with a pending order here, a very good pending order. That will be my final Euro USD sell. I sold a lot of this last year, all right? And then there's another one somewhere here. And you might want to use this as the stop loss for the second trade idea, right? This area is packed with some strong sell pressure, right? But you can see price never really arrived where we wanted it to arrive. And so now price is, you know, slowly but surely dropping, And then right there, we're inside a daily demand, right? So this is important to see. You have to see this for yourself, because intraday time frame, the daily chart is your guide. So when you really think about it, long term, we're falling. Short term, because of sentiment, we have been sitting on a demand, and then one day is a good day, and the other day is a bad day. And this demand is the only thing holding onto price from falling. This is a very risk-sensitive asset. The daily demand, just like euro pound, you're going to start seeing the similarities, has been broken. The daily demand was definitely broken on the 24th as well, just like euro pound. Oh, you meant euro AUD. Let's see. It's on my list, so I'll get to it, I promise. It's asset number 7 on the list. But yeah, thank you for that. Right, so it's broken right there. And no need to be sorry. This is all for you guys. So I just do what you guys want to see and want to do. By the way, another interesting thing that happened in the office today, you know, that Bitcoin trade that I broke even on was up 3,000 but made zero because then price flipped on me last night and took me out. One of my newest traders, so they're a senior trader in their own right, but they're new to actually working with me on a day-to-day basis. He lost about $6,000 US on that trade. You should have seen. I'm bringing this up because it's interesting. This guy is a senior trader. He's like lost more money, and he has made so much more money his entire life for himself. But now that he's working under corporate conditions, it felt like he was so sorry. It's like it's yeah. People need to work on their trading psychology. It's part of the game, you know. It's part of the game. I just found that quite shame, man. Sorry, it's just a random thought. I just don't know where to put that thought. But I've never seen someone, it's almost like they did something wrong. Like losing money in the market is not always because you did something wrong. Like that was a good sell trade. That sell trade made a lot of money. We should have gotten out at 1:3, 1:4. We didn't, right? You should have broken even. Always break even so that you don't lose money at least. But nonetheless, it was still a phenomenal trade to take. Right, so check this out here, guys. On the H4 time frame, that 1 hour sell that we spoke about last week on Friday, on Thursday, sorry, got triggered on Friday, dropped straight into a demand that was then, you know, slightly broken. But markets created this. So now I don't know what to make of this, because on H4, we've got a new supply that price made contact with and is pushing price down. Markets are coming back to it. So all these long wicks are signs of strong rejection. When I flip to the 1 hour, I might have to delete some of these zones, right? So maybe we can keep this one, just make it a little bit, you know, a little bit pretty. Let's see what it looks like. Yeah, so that would be a perfect a size for it, right? Markets are you know, are startling to almost embrace risk off again. Markets are slowly considering, you know, selling off everything again. Look, so we've got this current H4 supply here from the Asian markets. So this is at the start of midnight. I bring up these market times because they're important for intraday traders. You want to trade where price was its most imbalanced at the open or the close, because those orders, generally speaking, are the most powerful, right? Look at the open of the Asian market, full sell pressure, right? Look at the this is 5 p.m., 6 p.m. coming from, you know, what we actually switch back to normal candlesticks so you can see properly, right? Or some of these strong areas of value opening midnight there, similar 9 a.m. right there. You know, you get order blocks and beautiful confirmation ideas. So now we're here 2 hours before New York session opens, right? And to me, it seems like markets might still be trying to throttle to the downside. If I go to the 1 hour time frame, and if I was to guess, right, this demand is exhausted, right? Maybe, not for me. I'm not a cowboy, but maybe those who want to buy would be looking to buy. They're buying on the fact that there used to be a demand, buying on the fact that they believe that this is risk on, or markets will move. Markets have arrived at market capitulation, where there's no more bad news. Because what happens is with market capitulation, I taught on this on Sunday, right, is that all the sellers, all the bears have sold and left. And the only people left are buyers, right? You get that a lot in stocks and crypto, where the non-believers, the ones who are like, no, I bought Bitcoin at 65,000, it dropped to 37,000, I can't take it anymore, I'm closing, right? They capitulate, they give up, right? When markets are done, because the only thing that moves price once again is money. When there are no sellers, markets go up. It's just buyers. Just one buyer is enough to push price up. One big buyer, that is, right? Because you just move from swing to swing, right? Buying or selling is a swing. So for me, I don't know. I'm not a cowboy, so I can't take a buy there, because despite the little good news that markets rally on, oh, there are negotiations, let's go up. Oh, Russia said they're going to switch off the nuclear, let's go up. I can't trade like that. I'll mess up my account because I'm busy with so many other things. I'm not always looking at active charts in general. And even before COVID and war, it's part of my trading style. I don't like constantly babysitting my P&L. It's terrible for my long-term psychology. I sit and forget. I let price move up and down without me. All I care about is entry point, stop loss, take profit. Right. So because of this, I'm seeing, price flirting. But this textbook-wise, this is a beautiful area of value that needs to be mitigated, right? This is a very good place to sell, textbook-wise. Supply and demand textbook minus the hocus pocus. Now you'll see some people starting to draw lines, looking for change of character on the 50-minute time frame, break off, blah, 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 blah. And then at some point in time, waiting for markets to grab higher liquidity. If that is the case on the 15-minute time frame, this has to be sorted out. I mean, it would be almost a crime. It would be almost a crime for this area right there, for a nice strong wick not to enter somewhere in this area and then rally to the downside again, right? So I personally, because I am not a cowboy, would be looking to sell here. This again would be a short-term sell. It's not the type of sell that I want. The type of sell that I want is almost 200, 300 pips away, right, further up. Because of that, I'm entering this sell a little bit worried. I know for a fact that one day when markets decide they want to go collect all that money, these small sells are now in the way. All right, so just be very mindful of that as price bows down to market sentiment, right? But remember, if markets start to change character and bullish signs are selling, go easy with the lot size here. But in terms of textbook trade setup, there's a beautiful, massive imbalance that needs to be filled and mitigated, so to speak, right? And I generally cannot resist such an area. If you take the whole 1 hour area, just want to walk you through it real quick. If you take the entire hour, this is about 22 pips. And then if you have a second sell order or just one, and you're looking to just squeeze the 50-minute supply inside the 1 hour supply, and then you're looking at about a 12 pip hold. But remember, validation is very important, right? So all these sells that we are taking, just so we're not crazy, are inside an H4 order block, number one, that has already been tested. The volume multiple time frame analysis is very important. All the cells that we want to take are just deeper touches of an H4 order block. So there is confluence, but all these cells have already been, at least been tested once, or we're trading a basic retest. And after that, there's nothing else to stop price from going a little bit higher, right? So this is kind of like technically a risky trade to take, but I'll be taking it because, generally speaking, I want to see some type of mitigation. Once this area is taken, and I'm glad that price is knocked out some demands here, we have to be very careful and make sure we get out immediately when it's now time to get out, right? So where price is today is almost a 1:3, right? A little bit further in line with some of these demands would be a clean 1:3. Those of you who have a sell position by the 50-minute order block, that's a 1:5, right? Closer to the stop loss, etc. So this is what you're looking at here. This could be a good run, but it's at a very precarious place. So just be mindful of that. EURUSD done. EURCAD. Do I not have EURCAD done? Then after this, we'll do EURAUD. Where's the 1 hour stuff? Right. Okay. So we're a little bit behind with EURCAD. Let's just quickly polish up some things and see where we are. Right. So price never came back to the sell. Instead, markets have been going down ever since. So why would EURCAD go down? Oil is back up. Oil is playing around those 98, 99, $100 per barrel, which means CAD is naturally strong. I'm sure we are all struggling with AUD CAD, what you call this, supply or sell-off trade, right? And the fundamental reason is because as long as oil is strong, CAD economy generally would do okay, right? So it's not like we can change our trade ideas. We just have to wait for the change of money. Or you can get out if you don't have faith. I know some of you got out a long time ago, or you can get stopped out, right? It's really up to you as a trader. I don't, because I'm studying clusters for the first financial quarter like I always do. I need to see what worked and what didn't. This year is going to be different because I've got war affecting, some statistics, but nonetheless, You must be able to trade in any type of market environment, right? So EURCAD, guys, is just been a clear sweep to the downside on the H1, H4, clear slip to the downside. There've been, several order blocks, created along the way. Markets coming back to retest most of them right here, retest, and then we're here now. So this is interesting, right? This is the last time markets provided us with a potential clue of how deep they want to go. And one would not ignore the stuff that happened here. I would actually, it's broken. I would ignore it, right? So this is what's going on. I don't even think it's worth showing right now, right? So H4 price is dropping, but now prices drop into a demand. Now this is very low on the curve. It's a good supply, but it's low on the curve. This supply makes more sense if price first breaks the entire demand. And then you won't hear me saying it's low on the curve. The supply will make sense because if markets were to remove all the buyers first, I'd be happy to take that. On the daily, we have clean rain of fire, just red. Now, what happens now, intraday traders, be careful. You'll get an hour order block, H4 order block, a little supply there, but you'll forget the flow of money. You'll forget most of the stuff you learned in module 1, that higher time frames matter for a reason. If you're looking at this thing from a daily perspective, right, which is a good place to start. Remember I said daily is your governor. If we're in a daily demand, then the next thing you're looking to get out of is a daily supply. So can you see how, even though we are hoping that this area gets removed, that if it doesn't get removed, or if it meets enough buyers, then you have a problem because price has to at least rally to an equalizer, a daily supply. So we've got the 24 pips, 50-minute supply in there somewhere that we're still holding. Selling here now is high risk. And I know I'm talking in terms of swings. I'm talking in terms of swings right now. Selling here is high risk. I would take a beautiful swing trade here, a trade that I won't close anytime soon. I'll take multiple intraday trades somewhere up there. But selling down here at just outside the dragon's mouth, that the buyers, so to speak, is a serious risk. It could be a highly beneficial risk, right? I'm not saying it won't happen, because like I say, CAD is strong because of oil, but I would prefer first take this whole area out, come back in here, and then move down, right? I will not be taking any buys until I see some clear buying signs. And we might see them today from like 2 p.m. We'll definitely have clarity on this area of value tomorrow, in tomorrow's open session. Tomorrow I'll be consulting again, but from 10:30 a.m. So I'm pretty sure if I can start our London session at 9 a.m. sharp, and then it's like a 15 minutes drive to the office from my house, I'll finish at 10 o'clock-ish, we should be fine. So let's see what happens, because all things being equal, this is a short-term buy that's about to take place here, right? A short-term buy granted by the powers of the H4 time frame inside a daily demand, even though long-term this thing wants to fall. So be very careful, right? So you could be careful in the sense that you want to look for a buy, but more carefully if you're going to start to sell up here. What to do now or what to do in the next few days. On the 1 hour time frame, let's see if they even give us a chance. There we go. Value-based demand, clean, clear, beautiful, clean rejection, not the best imbalance, but nonetheless, and also not the strongest trend living, but later on picks up impulsive moves, but that's a bit late, right? So I would wait there. If you're a cowboy and you want a counter trend, I've been seeing a lot of that stuff in our public Telegram group, and I'm always pleasantly surprised that people are not just doing what Leroy says, and they're finding themselves. They are swing traders, they are intraday traders, they are scalpers. Everybody can make money their own way. I just like doing stuff this way, right? So this is a good possibility. All right, those of you want to take this buy, it's justified. I would be looking to take profits here just in case there's enough sell pressure, or not take profits but lock, protect, take some profits, break even. But for the most part, this is a good place to buy because it's ultimately the closest place to the daily stop loss, and so you might actually get a healthy R&R, right? 1:3.4, so almost 1:4, right? So this is a potential trade setup. I'm more onto selling, right? So I'll be looking at the strength of this area of value, which I don't like on the 1 hour. I don't like what I'm seeing here. maybe if I do something like this, right? So maybe on the H1, I might then look to kind of like take some sell setup somewhere there, which means if you're buying, you know, to my area, you know, you're almost getting yourself a nice 1:4. All right, so that's EURCAD, if that's fine with you guys. I'm just worried about time. Euro AUD. Oof, everything is touching green zones, right? Which makes it awkward because green zones generally are probably long-term demands that we've been tracking. Have I not yet put in the 1 hour lines on this chart? I am such a flop. Right, so let's see what we have here. Long-term sell, right? So we spoke about this. Markets, unfortunately, I'm not triggered. I don't know if anyone else is, but I'm not triggered in here. All right, so I'm watching this, still waiting for a good trigger. In my humble opinion, markets have not yet at all moved on this area, have not taken money from this area. What markets have done is cleaned out liquidity here. Well, what we now want is to mitigate all the way up there. So from a swing perspective, I have not been triggered here, but it's this type of downward trend, all these strong red candles is what we wanted for ourselves up here. They might be difficult to get in the second round because of how choppy markets can be coming up, number one. Number two, the fact that sellers might feel extinguished, like we've already done it, right? And so markets might then be cruel and then look for a higher supply from where we are, but we'll cross that bridge when we get there. We'll cross that bridge when we get there. But this has been very, very interesting to kind of like see. Euro AUD, all things being equal, outside of a whole entire war, would have been prime for a short-term buy. I don't even know what the governor is doing, but I'm just saying based on the daily structure, Euro AUD would have been extremely prime for a nice, strong government buy, right? So, wow, that's interesting. We've got PCPs and negations here. Weak demand held about 2 times rather, then the third time here, and then the fourth time. Prices coming in crashing hot. For price to come back up here where I want to sell is truly, you know, starting to look like a dream. It will come back one day, but look how far we are. Because essentially, I want price to come back and make contact with the monthly supply. Essentially, right? My daily sell setup is inside a monthly supply. And essentially, what I'm asking for from markets is to go, do me a favor, please go back one more last time up there before you come down, right? And I don't think markets are my friends. If you look at euro pound, by the way, you're going to have a similar setting where these demands are overridden and there are better areas of value down below. I mean, one of the obvious first ones will be somewhere here, despite how poorly drawn this paint line is. Right, so it's going to be very interesting to see if markets can actually unequalize these areas and go a little bit lower. Let's get a screenshot quickly of the weekly. Very strong candles. I mean, strong candles. Now, the daily supply that I want is obviously inside this weekly supply that held its ground 3 times. 1, 2, 3, clean. And every time it did, price dropped, right? So now we're looking for the ultimate sell setup, which is linked to the governing time frame, and this is all possible, but I have to be realistic. It took 1, 2, 3, 4, 5 weeks for price to fall. 1, 2, 3, 4 weeks for price to almost come back up, but never make it. And then this new supply held price across almost a full month of January into February, a whole month of February, sorry, falling into this area of value. Right. So Euro AUD from governor to governor, you know, outside of a war, this will be a nice time to look for solid buys, bearing in line that we are breaking glass effect walls, right? So essentially, it's a risky trade to the upside. And what could happen is because of sentiment, right? You know, markets could push. Remember, these two are both risky assets. Euro in its own right is sensitive. AUD is equally sensitive. AUD is slightly strong today, by the way, 3 a.m., whatever. The interest cash rate, well, you know, forecast stayed at 10%. So it doesn't necessarily make AUD bullish, but it definitely doesn't make it bearish, right? So if you've got a weak euro, even in the slightest, markets are going to fall to the downside, right? As they're falling, I'm trying to find like a saving grace. I mean, this daily demand has been tagged, you know, quite heavily. right? And even the ultimate demand here, I'm just going to give us a horizontal lane right across it there, has been holding price. So price took off, then fresh touch, one, bam. Just checking that white retest, right? And markets are coming back here, right? So it's unfortunate, right, that this is where we are, right? So I might have to let go of this idea. Number one, there might be a strong push to buy, and if there's a strong push to buy, we will have to start to consider lower sales. We'll have to start to consider the fact that, well, what if markets don't get up there, right? What are you going to do, right? Well, what if you hold on for something and it never actually happens, right? So that's something that we might all have to look into. Right, so something like that. And then if I was to get some type of confirmation, swing high, swing low, let's say the swing low is on the white line right there. You see that? So I still need price to drop a little bit. This is just speculation now, speculation, right? And we get there, we get a push into the golden ratio area. That would be a good place to shoot. This is now swing trades, but I can't make an intraday decision without knowing this. So in the short term, Euro USD, Euro AUD, sorry, might want to start pushing up in the short term. There are a lot of supplies along the way. I mean, H4 was such a choppy mess coming down. I mean, it was absolutely disgusting, right? So you might get, you know, some type of your first class resistance here, and then you want to watch this thing create higher lows and higher highs, etc., as it tries to break structure to the upside. But essentially, it might all come down to this area here of value, right? And on the 1 hour time frame, to complicate our lives a little bit more, markets have been falling non-stop. You know, every time price creates some type of value-based demand, it breaks it, broken, lower, etc. So this is going to be very interesting for price. If I look at this last leg, this is on the shorter time frame, this last leg, and I prop it right at the top of that demand there, then there's action here. Short-term action though. First to deal with, I don't know. The strength of this is very close to a demand, but I'm just looking at the stuff that's currently going to be one of the first things to almost kind of like make sense of. A strong bearish engulfing pattern after a Talitha area, somewhat of an imbalance after another Talitha area at the 50% mark. So price could even stop at that 50% retracement, and that's that, you know, to kind of like sell. Because of time, I might not finish all the assets. I would like to look at FTSE, you know, before we wrap it up. And the other thing is, I would like to, unfortunately, I do apologize. I would have preferred to have been ready for you guys with all this stuff, but I just want to quickly build in as the session opens. Even if we don't go all the way back to where we started with the other charts, we just want to quickly see how this thing opens during the London session and how it closes, right? And doing that once again will start to burn into your mind very clearly how money changes hands, number one. But number two, how smart money is the same in every session across different countries, right? The goal is to make profits from dumb traders. I want you to see how consistent they are, because they actually are quite brutal in that sense. So yeah, I do apologize for doing this right now. I will pencil to do it for you sometime in the afternoon today at 4 o'clock. When I get another free 45 minutes, I will then work out. Someone sent me a message asking about the podcast. Absolutely, it's coming back. It'll never stop. It was just me going through something. So I had to take time to study uranium, Ukraine crisis, and all that kind of stuff. And because my hours are just booked, my day, I live according to a timetable. It was the only hour I could make moves. Like I said, we did give out scholarships last year from a trading challenge. And look, I obviously I didn't know about a war. Like, I'm not some fortune teller, but I did know that uranium is important. And now that there's this whole thing going on, I just want to make sure that the people that are studying this thing on behalf of 365, I know the literature as well as they do. So the last week, that 1 hour, I'm just been putting it into that kind of stuff and really understanding the tensions. Really, you know, I just want to make sure 6 months from now, 9 months from now, a year from now, 365 maintains, a clean record, good calls across the board, right? So this is what I have right now, right? So this is what the 1 hour on Euro USD would look like. On Euro AUD, why do I keep saying USD? Right now, if you look at what we've done, we've now put in some sessions, and you can tell for yourself that the current dominating session, well, this one was taken out, was it not? Yes, it was. It was taken out, so we'll ignore that. Let's find another one that's not a clean imbalance, but it is a bearish engulfing pattern. So there's that over there. This is all on the short term. This stuff here in front of you is all on the short term. This is all on the 1 hour time frame, right? This is the golden ratio that we just drew, right? I would ignore that one. And then finally, where price is now, right? So there's a lot of sell pressure to deal with, but markets are coming up with a strong demand. So I would be mindful. I wouldn't sell here until all of this green was taken out, right? So this definitely is a bad idea. I would only sell at the next place because of the golden ratio, but I'd go very low risk and be very quick to protect myself. And then my target also is very unclear right now. I mean, I can't see any demands, but on the right, but that doesn't mean there are not many demands on the left, right? But somewhere here might be a good idea to get out. That's a nice 1:3 in the short term, right? But remember, when price explodes from a demand, it barely ever stops. It's a demand, daily demand will look for a daily supply. So for me, all these supplies are now in the way, humbly speaking. All these supplies are in the way, and Euro is going to be shaped and strengthened by ADP and NFP, right, which is dropping in the next few days. So just keep that in mind. Let's quickly look at UK 100, ladies and gentlemen, and then if it's okay with you, we can call it a day. I did start a little bit late. I apologize. Right, so this is my clean gap trade that I told you guys about, right? It's the only thing that I was able to catch and trade at midnight. And this was that main big supply that we spoke about on Thursday. So pending orders, it's nice to have pending orders and wake up to some serious money, right? Markets gap down. I took profit somewhere down here, just above this area, in the shorter term frames. And I actually thought then that I was going to let the trade run and markets were going to go down even deeper, but I got freaked out by the gap on Monday, and I was like, nope. Knowing markets, they might slowly start to make their way back up to close the gap, right? And I don't think that where markets are going back now is a good, healthy supply. All right, remember, for UK 100 or FTSE 100 is slightly different because it's still trying to overcome COVID supply, right? This whole area here is still trying to overcome COVID supply. So I want to quickly see what the February candlestick looks like. This to me looks like a bearish engulfing pattern. You guys see this? The COVID candlesticks pattern here looks like a bearish engulfing pattern. Then first day of March, this candlestick looks like a sharp retest, right? I wish I was in some sell positions. On the weekly time frame, we have something similar. Right, markets might be interested this whole week to finally fill this long wick. If not, because already the wick and the candlestick close is already out, right? Markets might do that, but it doesn't stop the next month from opening here to push further to the downside, right? Nothing is there, nothing is stopping that from happening, right? So we might see some more downside action on the FTSE, but again, this is all dependent on fundamentals. Unfortunately, sentiment, right? Is there a war? Is there not a war? Are they changing their minds, etc.? Now, while we have a bearish engulfing pattern on the governing time frame on the daily, we are struggling, with a massive bullish engulfing pattern where the retest was meant to be at the top. Those of you want to see what a strong retest, which will guarantee upscale profits, looks like this price comes with the top retest there at the top of this red candle and goes. But look at this, the red candles went below, the retest area, right? Signaling potential weakness, right? Signaling the fact that this daily might not be strong enough and price might actually reverse to the downside. Granted, this was a very good demand holding price, right? This demand there is what's holding price, up. So only time will tell. Only time will tell. Right, so there we are on the daily. We've got a mixed idea. We've got a strong sell sentiment market right now or at least for today, slightly strong sell setup on the governing time frame. But on the daily, because of what happened on Friday, markets are still reading from the strong rally up. So that long bullish engulfing pattern is from Friday's strong rally to the upside. And then after that, all price did was Talitha to the side. And then today, given the fact of the headline that we just read right now, markets today have completed a bearish engulfing pattern, right? Almost indicating that they want to go a little bit more further. Is on the H4 time frame, and on the H1 time frame, you can definitely see a clean bearish engulfing pattern. One could wish for a retest right there, and then a drop. Personally, that could be put spontaneously perfect. The only thing I don't like about that trade setup is it hasn't fully closed the gap before it starts to run to the downside. But short term, FTSE is cheap, so you can just take a big risk-ish, big, not by like lot size big, but I'm just saying the fact that you're taking a risk of an area that is completely uncertain is a risk in itself, right? And you can take this there and then play along with it and see for yourself what's going on. If price will actually do, give you a retest, that's a nice area to mitigate on the H1 time frame. On the 15 minutes time frame, it's not nice. One day, okay, remember this is just a test of module 3, but they're just like in module 1, there are some qualifications you need to see, especially on 15 minutes, and this is one of them that shows you that the area of value potentially might have weakness, right? You want to see strong explosions even on the smaller time frames, but right now on FTSE 15 minutes, this is a place to take a chance on. All right, and then there's still a gap to the upside that needs to be filled, but at least majority of the gap is done, right? So I mean, it's up to you, dealer's choice. I might put a pin in order here. Just look out for this, but just remember that this is not your grade A type of it's not you remember you want your base short, back to module 2 basis. Just want you a short base from a demand in the peak, and 3, 4, 5 candlesticks is not the base, but there is a nice little doji over there that kind of like helps you. So you could narrow it down like that. I would take it like that, and then see what happens, right? But remember, all of this stuff, sentiment. These guys could be like, and Russia said all these convoys were carrying food for the Ukrainian people as an apology for the war, and all of a sudden markets are bloody positive and extremely bullish, and you get kicked out of that sale, right? So I mean, I'm being dramatic, sure, but the point is just be mindful. I feel a little bit bad for robbing you guys, so let's just do pound AUD, but I cannot finish all our assets. Pound AUD, you know what my dream job is? My dream job is to be able to spend 60% of the time with my kids and play. We love to play video games with my little boy, do power of play with my little girl, take my other girl who's not little because she's my wife, but acts like a little girl sometimes, for little tea dates. I enjoy that kind of stuff. Always have at least 2 to 3 hours of reading per day and still make the type of money I make in the markets. That's my ideal job, right? Fundamentally teach, create a lot of free content like this on YouTube, and then do proper servicing of students in the academy, right? So that's my dream job. But what's in the way is the fact that I run a trading floor, which is very corporate, which requires me to be slightly more present than I'd like to be, right? So I keep saying I have to go because there's another thing at about 12:30 that I need to quickly attend to. But I hope this morning session was beneficial to you. I hope this helped. Right, so we're looking at pound AUD, and pound AUD is starting to break hearts, starting to break some hearts, man. Weekly supply still in charge, markets falling, markets tearing down weekly demands. I mean, yes, there are other weekly demands along the way, but come on, man. Any type of movement that breaks an area of value must be deemed powerful. Not only that, but also must be deemed, directional, telling you exactly what smart money wants to do. The last time I checked, the broken demand was somewhere here a couple of days back, and you can see markets have proceeded to go to the downside, willingly, right? So let's make this area green because we're now on the daily time frame. There's a lot of pressure to the sell side, right? If we're doing a top-down analysis, And so what we want now is to kind of like locate some strong actions. I'm actually going to double join these things, right? There's a demand here, got tested, set on it, and then price came. And I'm going to assume that markets want to fall. If I was to ever want to take a swing sell, this is a good place to wait. Long time. Long and all these trades, guys, don't your clusters will trigger, right? That, like me, there's some trades that I get into and get out of without even remembering when, until I go to my actual MT5 and check the date of when I set the pending order. So do not give up on cluster trading, because you will have a separate account for small accounts, sure, for small time frames, but we all know where the real money is hedged, right? So this is what you're looking at here on the daily time frame. Prices leaving a daily supply, taking out opposing daily demands, taking them by the numbers, and the next best place for defense is somewhere here in this green zone. So when I start to get Bongi, I hope that was fine for you, by the way, for EURAUD, and I'll check up on your gold trade. How's the gold trade doing? I woke up thinking about that today when I saw Bitcoin up, I worried about the gold trade, because fundamentally it means money is swung out of a safe haven somewhere. Are you still in gold? Are you in profits? Let me know. Right, so this is H4, right? Systematically, prices dropping. We can see a lot of order blocks being made, but be careful, some of them are not valid. You only want good ones. This is a good one. It's a good one, but it's low on the curve. Supply and demand traders, when things are low on the curve, when you're about to approach buyer territory, you don't want to have too much strong selling. The sells here are very weak. Do not forget that, right? So we've got some type of weak supplies. There's some type of strong supplies. We've got an imbalance that validates our areas of value. A lot of people watch our YouTube stuff, but they don't do the course. And so they think that just because the candlestick is green, that's where you must go buy or sell. No, man, there's so many rules that validate areas of value, right? An opposing color is not enough. Please, please, please. Don't say you did that and then it didn't work. 365 doesn't work. No. There are lots of rules to the stuff, right? And then we might want to throw in a Fibonacci, but I can't even tell you where I'll draw the fib high, let alone the fib low. That hasn't happened, right? So be careful of this. This looks a little bit cool, right? As long as price extends to the downside first, then maybe, right? Maybe, but you are approaching some strong buyer territory, so just be mindful of that, right? On the 1 hour time frame, which is where we want to be today, you will have a situation like this. So you got a Talitha area sometime in midnight, which was the opening of the Asian markets, and a drop, and then there you go, London session trying to stretch forward. Who would be surprised if the New York session then starts here today and then closes lower, right? I wouldn't be surprised. I wouldn't take the trade. The supply makes no sense to me. I want something a little bit higher, right? Generally speaking, that I learned long time ago, the urge to trade now is the ability to, do you have, oh goodness gracious, yes I do. Sorry guys, well, I don't know now. Just wait. Right, so this is what we have going on. This is what we have going on. All right, this is what we have going on. This is gonna definitely, guys, I'm getting notes now. You see, I'm being told I have to go. It's 12:30, blah blah blah. Right, so I would wait somewhere here. This is a better place to sell. This is tricky, but this is where markets could turn today at 2 p.m. Ladies and gentlemen, thank you so much for attending our morning lives. Sorry it started late. I will be around tomorrow to start on time, but leave at 10 o'clock on the dot. I hope this helped you. I hope you're doing well. I did say I want to check on gold. Bongi didn't respond. Maybe she's gone. Let me just quickly look at gold. Oh, okay, cool. Beautiful. So breaking even yesterday was the right call. I'm bringing this up because I explained my logic. I say there are 3 demands on gold. This is probably going to get broken because then there's a lower demand, and that's the one that price is holding on to. And I think Wongi said she was at 886 or something like that. I don't remember where, but somewhere down here. So the idea was just break even and hold, right? Break even and hold, and let's see if markets can get back to up there. There's nothing but up for gold, right? As long as tension is continuing, this is an obvious trade. Keep buying, at safe places. Make sure you're aware of the daily daily zones, right? The daily zones are important. Daily demands, H4 areas of value, right? So gold is now slowly but surely creating an imbalance on the H4 chart, which will definitely, protect any 365 trader who bought down here in the lows. Like I said yesterday, look, man, even though war might look imminent and forever, I'll take profits there. I'll definitely take some money off the table right there. Right, so that's quite interesting, right? Gold is still rallying despite Bitcoin rallying. So how are they thinking through money? DXY chart real quick. Look at that. Look at that. Guys, tomorrow is Wednesday, ADP. And now DXY is heading towards a supply, maybe to break it. And in the process, we're creating a demand. 365, everybody, I appreciate you. Shake my hand. Please don't forget to like the video. There are more people watching than there are likes. Let YouTube know that we are awesome. If you think we are, and have a beautiful, day, and I'll catch up with you guys tomorrow. Goodbye.